Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of June 3rd. If you are watching this video and ever wonder where this article is with all the updated charts and everything, you can go to the Trade That Swing website, TradeThatSwing.com, and go to the stocks heading, and it's under stock market analysis and trades, and you can find it there. Each week I go through the same process, just deciding how aggressively I'm going to be deploying capital and looking at a few different things: market health indicators, recent watch list, trade performance, sector performance. So we'll get to those things. As of this week, as we head into this week, I'm viewing market conditions as mediocre. We'll discuss why. It's kind of right on the cusp of, being okay or not being great. And I tend to stay out when that is the case, because it's not, I like trading when it's easy money, when, things are just flying up, lots of trades. For the most part, things are just getting bought up, and that's kind of not happening at the moment. And it's also not a great environment to short in. So I'd rather see things really weak, selling off hard, and that's when I like to jump in on the short side. So there's some watch lists you can check out. The best swing trading stocks watch list for June. I have to update this one. It was updated I update it every 2 weeks, so it was updated middle of May. I'll be updating it maybe today or tomorrow. So it'll be updated for June. Two lists, one very strong, one very weak. I like watching these, but the conditions still apply, so I won't be placing any trades based on those lists. But if conditions were to turn favorable, then I'd be looking at those really strong stocks. The current stock watch list, I have not updated this in a while. It's specific patterns, and then there's some other ones you can check out there as well. So let's get into some of the charts and what we're seeing out there. So we had discussed this in prior weeks, where we had this strong run up, very small pullbacks, then we had a bigger pullback. That can lead to choppiness. When you have really small pullbacks all the way up, and then you get a bigger one, it just shows, hey, sellers are a little more active in the market. And then we did have a nice run up after that, but we got a little bit of choppiness since. And the NASDAQ, we went to new highs. The S&P just barely. The Russell 2000, we didn't make it to the prior high here compared to this one. And the NYSE Composite, probably the broadest measure of stocks, lots of ones from different sizes, different industries, and it just barely made it to that prior high before having a collapse. So we're seeing that kind of choppiness playing out, and I prefer just to stay out in those types of conditions. So have not been doing very much for quite a while. This is the Canadian index, same thing. This was a little bit smaller drop, but we're seeing that same little bit of choppiness going on. We just barely got to that prior high and then had another little sell-off here. So a little bit choppy on the Canadian side as well. Let's look at Bitcoin. We had this big run up. This was about a 22% pullback in here. This one looks bigger, but it's just longer. This one also about 22%. So this is a kind of, from what we've seen, a typical pullback. When we go back through Bitcoin, we see 20 to 25% pullbacks, very common. And so we're still in a typical pullback. It's just taking a while. We got back to this 69,000 level, which was the prior high from a few years ago, and we tend to get choppiness around that level. It's lasted a little while, but I still like this overall price action. You can see us starting to round out a little bit here if we pop out of this little consolidation. A little bit of a pullback from here wouldn't be that bad, but I'd really like to see this start breaking higher, and that'd be a really good sign for the next run. Gold, I discussed last week. It's kind of okay. The GDX, which is the gold miners ETF, so kind of, you could think of it as kind of an average of all the gold mining stocks out there. That price action's okay, but it's just super choppy, and I don't love that. I talked about it earlier. I prefer to just be trading easy money environments. And gold, really strong run, tiny pullback, what we talked about with the indices. When you have a bigger pullback, can lead to choppiness. So this was a much bigger pullback than this one, and just got to that prior high again, and it started to sell off. So big picture, if we were to pull up like a 10-year chart of this thing, gold's still looking pretty good long term. Short term, I don't love this choppiness. The fact that GDX is leading, it did make a stronger high here, this one compared to this one. A little bit of a pullback here. If it starts moving up, that's pretty good, and it'll probably, when it leads gold, that's a good thing. So if it's moving up, and gold's a little sluggish, but the miners are moving up, that tends to be good for gold. So overall, I don't love it. If you found a gold mining stock you really loved, maybe you could make the argument that this is some okay price action, but I wouldn't say it's the easiest money environment either. So I tend to save my money for those opportunities when it's things are just moving really well. This is a look at the market health indicators. This looks at what's going on under the hood. Even though we had a big spike on volume there, volume not important to me at this time. This is the daily percentage movement of the S&P 500. It gives the percentage movement that the S&P 500 is moving per day. And low volatility is characteristic of uptrending markets, and you can see we have had that for a long time, basically throughout this entire rally. What I really look for here is single day. If the price drops 2% or more, that shows very strong selling pressure. It's generally best to avoid the market at least for a few days till you see what happens. And even through this decline here, very low volatility, no big huge sell-offs intraday, so that is a good thing. And so that told us this was probably going to be a kind of smaller type decline that would ultimately resume to the upside, not a huge crash or sell-off. And we're seeing that throughout these smaller declines as well. So this has stayed good for a long time, just letting us know we are in a bull market. The little pullbacks we are seeing are likely to be resumed to the upside, but this is not predictive. It is only telling us what happens now. On any given day, we could get a 2-3% sell-off, and that changes the dynamic and issues in that, be extremely cautious scenario. This is the advanced decline line. I've just zoomed in on it a bit so you can't see the history, but this has been pretty strong. You can see there was this little peak here, and we've moved above it on the NYSE advanced decline line. On the S&P, that would be equivalent to this and this. So you can see on the S&P, we're still a little bit below where we were several days ago, whereas the advanced decline line has already moved above that. So that's a tiny bit of a bullish bullish divergence, which is a good thing. So I gave this a smiley face. This one's a smiley face. This one's neutral. This is just up volume divided by total volume. I'm looking for extreme readings. It needs to be at or below this black line, or at or above this upper black line. And what that just tells us is either there was a huge amount of volume in stocks moving up, or a huge amount of volume in stocks moving down, or most of the volume was in stocks moving up or down. And you can see we've just been fluctuating in the middle here, so no real signs. This is one I like. This is how many stocks are above their 50-day moving average. The turquoise bluish line is all US stocks. The reddish line is S&P 500 stocks, and you can see it's right on the cusp of right about 50%. So only about half of stocks are above their 50-day moving average, or what we could consider a very crude measure of an uptrend. And it's just much easier to make money when most stocks are, really humming along and above the 50-day moving average, when you have lots of stocks that are hanging out near that 50 line, which we had during this period. We were just kind of really grinding up, but not a lot of, really strong buying. And that's been the case. We ended up falling off on the index, and we're still hanging out near that 50% level. Let's look at the sectors. Energy and real estate trying to come back. Energy had a good week, so did real estate. And technology good over the last month, not so good over the last 3 months. And financials kind of decent on all these time frames, up near the top on the 1 week, in the upper half on the 1 month, in the upper half on the 3 month. Communication services, same kind of thing, a little bit mixed, a little not so great last week. They were up, but not as much as some of the other sectors. Near the top on this one, and near the top over the last 3 months. So what am I doing right now? Well, big picture, I still like Bitcoin, and ultimately needs to break higher. If it starts doing that, I may add to my position. Gold and GDX, very whipsawy and choppy right now. I don't like that. Not considering any long stock trades until conditions improve, or if they get worse, I may consider some shorting. So that is your stock market outlook for this week. Have a great week out there.